2026 is going to be a bear market for Bitcoin, and that's exactly what I'm breaking down for you in today's video, because the entire economic outlook points to the next cycle bottom. On top of that, we are also going to see how the cycle strategy can be used in 2026, breaking down the 4-year, weekly and the daily cycles, and the most relevant on-chain data so you can stay ahead. So if you haven't already, hit that subscribe button and check out some of my recent uploads. Now let's jump straight into the core of today's content. So the first thing I want to talk about when it comes to 2026 for Bitcoin is the economic outlook. And there are some relevant pieces of data that I want to show you guys to give a more clear view if the economy is actually going to support a bear market or a bull market. And the first relevant piece of data that I want to talk about is the 10-year real interest rate. Don't fall for the trap when everyone talks about rate cuts are going to be bullish, because we are going to talk about that pretty soon. But first things first is that if the real interest rate is not below zero and we keep having rate cuts, the price of Bitcoin and risk assets in general will continue to drop. And from what we see here, as of December 2025, the real interest rate is at 1.45, quite above zero. If you compare to the COVID-19 pandemic rally right here at around 2020, when the price of Bitcoin skyrocketed, the 10-year real interest rate was quite below zero. So in the same way, if we want to see the price going up in the medium to long term, meaning from at least 6 months until 1 year, the 10-year real interest rate must be below zero, which is not the case right now. So we're still gonna have a lot of rate cuts on the way down until we finally get to this threshold. The second piece of data, which is quite relevant, is the unemployment rate. I have been saying this channel over and over again that we are already in a recession. I cannot believe that I'm the only one who thinks that it is extremely weird the fact that the US government is not releasing unemployment data. If everything was okay, they would be releasing just fine, but they're hiding it. And although right now we can see that it is still increasing, but it has not actually peaked, I think it has already peaked, or maybe it is way worse, but we just don't know it yet. And that's an extremely strong claim for a bear market in 2026. If the unemployment rate is high, people are losing their jobs, economy is slowing down, and the consumer confidence will also go down. So all of that, although we cannot see in the unemployment rate graph right now, because they decided not to show us, makes me think that 2026 it is still going to be a bear market. The next piece of data is the inflation rate, specifically the trueflation. This is going to be more supportive for the Fed to keep cutting rates. Since the first quarter of 2025, inflation has been showing signs of increasing. But like I said before here, until we cross this level, we cannot say that inflation is out of control. Quite the opposite. It has always been under control. So as soon as we finish December, inflation got back down. Another piece of data that's supporting a bear market is the Global Liquidity Index and the M2 Growth and Borrowing Rate. The M2 Global Liquidity Index is struggling to make new highs. And in the same way, the growth and borrowing rate continues to drop. Both this information gives me a strong claim that Bitcoin price will continue to go lower. The next piece of information I want to talk about is gold. From what we see here, gold is extremely overextended. Since 2024, the price has increased like hell. And all of that means that uncertainty is increasing. Sooner than later, I believe the price of gold will start to drop a little bit and consolidate before the next rally at around 2027. Last but not least, let's talk about the DXY. After hitting the support band at 100, the price is now dropping, hitting the strong trend line of the 3-year cycle low. Right now, I believe that's exactly what is about to happen. DXY will continue to drop, and then maybe after the first quarter of 2026, we'll start to see the US dollar increase back again, initiating the deflationary period. So all that piece of information brings me to the context in which we find ourselves. This is not a panic or normalization cut. Unemployment rate is rising and might be much worse than we think. Real interest rate has not reached below zero. All of that makes me think that further cuts in 2026 will be recession cuts. Only after that, only after we get a real interest rate below zero, then we may start to see some normalization cut. But until then, 2026, ladies and gentlemen, will be a recession year. Now let's talk about how we can actually trade Bitcoin based on the cycle strategy, starting by the 4-year cycle. And as opposed to what many people say, I do not think the 4-year cycle is dead. First and foremost, it is way too soon to say that the 4-year cycle actually does not work. And let's be honest, a quite bold claim. However, can I be wrong? Of course I can. But the first thing is, it is way too soon to say. So until I have a clear invalidation of the 4-year cycle, I think the 4-year cycle is still quite alive. So from what we see here from the previous years, here is the 4-year cycle pattern. At the bottom of each 4-year cycle, from what we see here, the RSI touched below the 30 level before continuing to move higher. That's exactly what we have been seeing since 2024, when the RSI has been going down further, which gives me the window at around maybe the end of 2026, extending a little bit at the beginning of 2027 for the actual bottom of Bitcoin. And here's also another reason why I believe the 4-year cycle is far from dead. If we take the midpoint between both bottoms, we can clearly see that based on the cycle strategy, Bitcoin price is right translated, meaning it is at the right side from the midpoint. If we draw the next midpoint right here, getting an estimation of the next bottom, this already makes us right translated where we currently are. So from the 4-year cycle perspective, I think we are still quite solid for a 2026 bear market. Now let's start to talk about a little bit some possible entries based on the cycle strategy. And for that, we are going to use the weekly cycles. Bitcoin weekly cycles have been shown quite strong consistency. RSI almost always goes further 30. In addition to that, during those weekly cycle lows, we see that the fear and greed index gets further down to extreme fear. So the best strategy when it comes to the weekly cycle strategy is to wait for a trend line break in the downtrend direction. So right now we have this weekly cycle low confirmed. From my previous videos, you already know that I have a long position already placed right here. And I am expecting the price of Bitcoin to at least reach the previous all-time high. This is the best case scenario. But I also have to be ready for the worst case scenario, in which we are going to consolidate around this area right here. And the first strong confluence will be a breakdown from the weekly trend line, so I can start opening short positions, making the next weekly cycle window at the second quarter of 2026. And look how cycles work. The next weekly cycle bottom right after that, it is going to coincide with the 4-year cycle bottom at around the end of 2026, beginning of 2027. So you can see that the cycles, they actually pile each other. And this is a strong edge against the market. But nevertheless, I believe we are going to get that final rally of Bitcoin, and then we're going to have some trend line break to the downside, so we can place my trade as a short position. Now, to a more granular level, we can talk about the daily cycle strategy. You can see it is a little bit more choppy compared to the 4-year and the weekly cycles, but it is still going to give us some interesting entries. In the first quarter of 2026, we can already expect the next daily cycle window. The previous daily cycle also coincides with the previous weekly cycle. So you can draw a trend line right here, and I would wait for a breakdown so I can place my short trades. You can use other confluence tools such as moving averages, crossover, or breakdown. I particularly like to use a lot the DSS and the RSI. But this is from the cycle strategy perspective. However, when it comes to on-chain data for 2026, we can see that the Fear and Greed Index is showing lower peaks of greed. The last extreme greed that we had was at the end of 2024, and it has been going down since then. This makes me think that perhaps we are about to have a last rally before we continue to move down. Another piece of information from the on-chain data that I'm going to keep my eyes on is the Bitcoin net inflow. Overall, you can see that the inflow is starting to decrease and the outflow is starting to increase. I believe that's exactly what's going to happen from the mid to long term until the end of 2026. Again, make sure to subscribe and hit the notification bell so you don't lose none of my videos whenever I talk about the crypto market during the rest of this year. Tell me in the comments what you think. Thanks for watching. See you in the next video.